The following program is paid for by EG Tax. All opinions or statements expressed on this program are solely those of EG Tax or its guests and do not reflect the opinions of News Radio 930 WBEN or Odyssey.
The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930, toll free at 1-800-616-9236, and cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is our hour to talk taxes. After all, we have 3 days left in 2024, right, to make some substantive changes so that we can save you some money. And we're going to talk about next year and some of the things coming up. And the important thing is we want to keep you in the loop, and you do have 3 days to make big changes. So that's what we want to talk about. And of course, I got Tiffany Fabian here in studio with me. Hey, Tiff.
Hey, happy Saturday.
Happy Saturday and Happy New Year.
Yeah, happy New Year.
And Christopher Fabian.
Hello, Esther.
Hello, Christopher. Okay, let's remember we've been talking, well, since last January about the BOI FinCEN requirement for limited liability companies, for
Corporations.
limited liability partnerships, and for subchapter S corporations, right? Because the penalty could be up to $10,000, and that went to court and that was suspended. But what happened this week?
Well, the people who took it to court lost.
So what happens now?
Now the people who were procrastinating now have 13 extra days. They have to
get it done.
Yep.
So what do they do? So you basically, the BOI is the business owner information. The federal government would really like to know who is the business owner or business influencers in your business. And so you have an extra 13 days till January 13th to get this in. Otherwise, you're looking at a potential $500 per day penalty until it gets to $10,000. And so it only takes very few days before that happens. You go to the Financial Crimes Network of the federal government, and it's called BOI FinCEN, and you input all the information that they want to know regarding the owners of the business or influencers of the business, and that's it. And there's no penalty, right?
Right.
I mean, they don't charge you for doing it.
Nope.
Correct.
But you got to do it.
That's right. That's when, if you don't do it, that's when the penalty begins.
Right, absolutely. And of course, EG Tax is here to help you with that as well. So if you go to that and you think, oh, this is just kind of scary, it is scary because it's a financial crimes network of the Department of Treasury.
That's right.
So
Yeah.
you want to make sure you do that. Then the other thing is that they figured out the other day, back in the day when COVID was happening, they were handing out money like snowballs, right?
Yeah.
And then what they just found out the other day is, heck, there was a lot of people that should have gotten that $1,400 recovery credit that didn't get the money. And so they have decided that they're going to issue those refunds, and you should be getting them before the end of January. That's what they're projecting. And they're saying you don't have to do anything if you filed. However, if you didn't file a return on 2021, you have to get that return in order to get the $1,400.
Right.
Yeah, there was even one of my clients recently, his father passed away, but it was when he was getting the stimulus money, he was still alive and he never got it. So him and I filled out the forms and he just got the stimulus money and he's the heir. So just something to think about.
So let's put it succinctly so people understand. And there's a lot of people that don't think they have to file anymore, right? And technically they don't. They don't have to file because they have no liability and they have no taxable income. And so in 2021, in the midst of COVID, they didn't do their tax return because they didn't have to. But like what happens so often in tax law, you may not have to file, but you want to file. And so if you are somebody that didn't file a return in 2021, you need to get it in, even though it's all zeros, so that they know to give you the $1,400.
That's right. That's right. Yeah, the only ones who will automatically get it are people who have filed and
Filed already.
didn't put it on their return. So they'll get a check. But if you didn't file, they don't know about you. So you're not going to get it until you file it.
Okay. I'm Esther Gillius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. 3 days left to the end of the year. And so that means all income received in the next 3 days that's taxable has to go on the 2024 tax return. All expenses that you pay within the next 3 days that are deductible go on the 2024 tax return. But starting on January 1st, all the income and expenses become taxable to 2025. So in 2025, based upon what I can see, it looks like tax rates are going to go down. So you might want to wait to get income for 2025. If you're somebody that wants to go collect money from people, I guess I'd wait for a few days. But all your expenses, because of the higher tax rates in 2024, especially if you have a business and are paying deductible expenses, you want to make sure you get those paid before the 31st or on the 31st of December. Mm-hmm. Right?
Yes.
Okay. Okay, I'm Esther Gillius, the tax lady, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. Our office is open January the
17th.
Thank you. And the IRS is open when?
The last
29th,
Monday,
right?
yep, of January, but we
Right.
still can do your returns.
That's exactly right. So you can come in. We got our software ready. We'll get you all in line. So boom, you're the first one through the door. And so hopefully you'll get your refund right away. Now, if you're somebody that's gotten a letter during the year and you blew it off, what might happen with their refund?
They might not get it. It'll be held up because a lot of the letters were for proving your identity and making sure that you were who you said you were. And so they're going to sort of hold up your refund until
They're not going to sort hold up.
Yeah,
your
they're
refund.
gonna-
They're going to hold
yeah,
up your refund.
yeah.
So if you before the 29th, when the IRS is open for business, if you have gotten letters from the IRS and you've ignored it, make sure you call EG Tax so we can get you squared away so your refund is squared away.
yeah, we'll help you, no charge. It's a great opportunity.
Right. Okay. And we got a text, right?
Yeah, it says, Chris, you want to read that?
Sure. It says,
Thank
thank
you.
you for bringing this up again, the BOI. So many of my friends that own businesses have no idea, sad
Hey,
face.
we have tried, haven't we?
I think every week we've talked about
We have
BOI.
tried.
That's right.
And we've done thousands of them.
Yes.
But, I mean, a lot of people say, why should I let the federal government know all about my business dealings? I mean, that's what happens when it's a law. Now, it may happen that once Trump comes into office, he may dissolve this whole plan. But right now, it's got teeth, and we wouldn't want you to be subject to a $10,000 fine.
That's right.
Right?
That's right. Yep. Because he may get rid of it, but that might be
But
from that point
and
on.
believe me, he and I haven't talked in a while.
What? He didn't use the hotline to you?
He did not. I mean, Donald never calls me, but I can just tell you that in light of what they're proposing, I can't believe that because he's really kind of anti-regulation, and this is a big regulation. But needless to say, you don't want to start getting a bill for $10,000 because it's easier not to have the bill than to start fighting the bill, right?
Yep.
And since it doesn't cost you anything to do the BOI FinCEN registration, get it done to avoid that bill. Anyway, I'm Esther Gillius, the tax lady, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. We're going to take a short break. We'll be back on the other side with your comments, questions, and calls. Hey, everybody, this is the tax lady, and to us, you are family. EG Tax branch offices are going to be open on the 17th of January. with all of our full staff ready to do your tax returns. We can't officially file them till the 29th, but we get you all set. And the other thing is, these are real people who will answer your phone and your questions, and there's no charge that we would put on you when you call and ask a tax question. We just want to be your advocate. So even if you don't use us, don't feel guilty, because we feel like it's much more important for you to have a positive impression of EG Tax. And eventually you will use us.
Right. And, you know,
I'm
AI,
gonna tell you, you're right. Go on, Chris.
AI is great, but it can only do what it's programmed to do. It doesn't know how to bend, I don't want to say bend but use the rules a different way.
Well, because there are gray areas in the tax law that come down to intent,
Yep.
right? And so you don't know what somebody's intent is until you sit down and talk to them about it, right?
That's right. Yeah. It's.
All right. I'm Esther Galias, the tax lady, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. All right.
Wait, sorry. I just want to say one
yes,
thing.
yes,
It's always better to get a live person, because when you use those chat boxes, those are just computers now.
Oh my God.
They're not.
Anyway, every chat I've been on, and I really am big on the internet. It takes 20 minutes, and at the end of the 20 minutes, nothing was done.
Right.
I mean, it's like to make you feel better, but it doesn't, because
Right.
ultimately it doesn't work. Let's talk about last minute things. I know there's only 3 days left. If you're somebody that itemizes and you really have no New York State taxes or property taxes, but you pay estimated taxes, you want to make sure you get your New York State estimate in by the 31st.
Right,
If you want to
Yep.
use that, right?
Right, because it's listed under the tax section and it's a potential itemized deduction. So,
Right.
yep.
All right. And then I hear, I mean, again, Donald hasn't been coming to dinner. I've asked him, but he won't come. I hear that he's not so prone to doing the big credits on energy conservation, which were so big under Biden. So if you're somebody that wants to do doors, windows, furnace, hot water tank insulation, and you want to make sure you're in on those credits that could save you a lot of money, you want to make sure you got 3 days to do it.
Yeah.
That's right.
And insulation, really, I mean, even I can do insulation, and the credit is very liberal on insulating your home.
It is. It
Right,
really
so
is.
that's a good one. So 3 days. I know Christmas just went by us. A wonderful way to do deductible Christmas gifts is to put money into 529 plans, and you have till the end of the year if you want to affect a deduction on your New York State return.
Yeah, it's a great opportunity to save money for you or your kids or your grandkids, and it'll help you on your New York State return.
Right. The other thing is RMDs. What are RMDs?
Required minimum distributions.
Okay, well, I just didn't do it. And so what happens to me if I have to do an RMD?
Well, now it's a 25% penalty
Of what I didn't
of
take
what
out.
you didn't take out. And even if you do have a good excuse, like your broker stinks and they never did it, now instead of waiving it, it gets reduced to 10%. So
But you still have to fill out a form.
you still have
to
to
get
fill
that
Right.
that exemption of penalty. So you got 3 days. Monday, go sit down at your broker and say, "I need the RMD. I'm 73. I got to do this." And by the way, I know you don't want it on your tax return. There is a way around it.
Yeah, you could do a qualified charitable distribution, and you could take the money that's your RMD and put it over into a qualified 529. And so that way you're doing two beautiful things. You're satisfying your RMD requirement and you're giving to charity. And that way it's not income on your tax return, doesn't affect your IRMA, doesn't affect your income for your STAR, and you're donating and blessing somebody.
Right. So if you did a direct payment from your required minimum distribution to a qualified charity, that distribution up to $110,000 is tax-free, right?
That's right.
All right. Then we talked about deferring income. And if you really want to do a Roth distribution, traditional to a Roth, please wait till 2025 and wait for the new rates to come out. You probably save yourself 10%. I mean, those people that did Roth conversions this year, I'm positive you can go to the bank on this. In 2025, the rates are going to come down, and you're going to say, "Wow, I overpaid because I did it before Trump came in."
Right,
Of course, you
and-
didn't know before, but you know now, right?
Right. And talk to your tax person too, as well as your financial person.
Right.
Because let your tax person run the numbers for you to tell you how much it's going to cost you now.
Right. Okay, let's talk to some people. I'm Esther Galicia, tax lady from EG Tax. 8030930, 8030930, star 930 on your cell phone. Who do we have
We
here?
got Jeff.
Hey, Jeff.
Hi,
What's new?
can you hear me?
I can hear you.
Excellent. My question to you is, I bought a new house. I closed on December 6th. I moved into it already. I'm closing on my other two houses in the next 2.5 to 3 weeks. So
That'll be
This is all new to me.
2025.
yes. So when I close and I get my money and blah blah blah,
So you're selling
need
the
to-
other two.
I sold the other two. They're under contract, but I'll be closing. The one's a cash offer, should be closed in the right after New Year's, and then the other one should probably be the middle to the end of the month.
Did you live in either of those two houses?
I lived in both.
All right, in the last 5 years, where did you live?
My main house,
Which is
one
one of the houses that is being sold, right?
Yeah, it's one of the houses.
All right, now the other one
lived in-
that you
I lived
didn't
that
live
for
in,
6 years, and I lived in the other one for 10 years.
okay, but in the last 5 years, where have you lived? In your primary, all right?
In
So
my
the
primary,
gain,
correct.
so are you single or married?
Single.
So your gain up to $250,000 if you lived in that as your personal home for the two of the last 5 years is going to be tax-free. Was that house ever a rental property?
Never.
Okay.
Either
How about
one
the
was
other
never.
one that you used to live in? Was that rental property?
It was never rental property. It was something I was fixing. Then I moved in, and then it got a little out of control with the fixing, so I was able to purchase the house next door, live there happily, and then tried,
Okay.
do what I can to the other one, and then it made the decision to sell.
All right. So then when you take a look at what you paid for the house that you were fixing, plus all your improvements, plus your expensive sale, from what you're selling it for, that's going to be a taxable event because you can only have one primary resident.
Yes, I got that part. Someone explained that to me.
Now,
but
the
my
new
question
house
is-
that you moved into, because it was so late in the year, it's probably not going to have much impact at all on your tax return.
Okay. So do I just wait till when I regularly file to do all
Well,
this?
on 2025, you're not going to do that until 2026.
Yeah, the
Because
the
those two
sales
sales-
don't go through.
I really wasn't sure because I have a buddy in Ohio who's a real estate attorney, and he spit so much stuff at me. He confused me.
Yeah, well, you're not going to, because they're going to close in 2025, you're not going to report those sales till 2026 when you're doing your 2025 tax return. The gain on the personal residence is going to be tax-free, and then whatever adjusted gain is going to be on your fixer, that will be whatever happens this year because something's going to happen to tax law. Just keep listening to Ask the Tax
Yeah.
Lady. We'll let you know.
The lawyer might have meant that you could do an estimated payment if your gain was going to be too large. And so you could do a 1040 ES, which is an estimated payment. But if you were spending lots of money to get
You're
it,
right, exactly what you just said.
okay. But were you spending lots of money to get it ready? So is your gain going to be negligible or is it going to be a significant gain?
I really don't know. This is
I think you should
confusing to me.
call Chris or Tiff on Monday or Tuesday.
It would be good to put those numbers together now while you have a clear head and you're not under the gun.
Yeah,
Okay.
and for no
give
cost.
us a call. We'll be very happy to help you.
Okay, sounds good.
And we
All
could
right,
we
thank
could
you.
help you do an
Happy New
estimated
Year.
payment if you have to.
Happy New Year. Okay, and then we have another call here, right?
Yeah, we got Harry from Buffalo.
Hey, Harry, how are you?
I'm doing okay. I'm surviving.
Good. Step in the right direction.
Well, that's only because I'm battling lung cancer right now, but I'm beating it, I believe.
Yay.
Anyways, I got a question. I haven't filed probably in the last 8 years because I'm on Social Security disability,
Okay,
and I was getting under $30,000 a year.
right.
But my wife was claiming my son every year because she was working, and she passed away 2 years ago, and nobody claimed him last year. But I was thinking of filing this year, but last year I got a letter from the IRS asking if I did a tax return, and I said no. She goes, well, we're going to cancel out this. I get another letter back saying we're going to cancel out the tax return that somebody filed. So apparently when I called her to talk to her, she said somebody was using my name and my Social Security number, filed and was getting a tax return.
Okay, so let me ask you a couple questions. Were you and your wife legally married?
No.
So when she was claiming your son, she was a single person, correct?
Yes. Yes.
Okay. So in 2021, you didn't file, so you have $1,400 coming back.
Okay.
So you want to make sure you get that return filed. That's number one. That's what we talked about at the top of the show. Secondly, if you have no source of income, is your son living with you?
Yes.
So because you have no wages, you're not going to get an earned income credit, and there's nothing in the tax law right now that would help you as far as your son goes, except in the state of New York, possibly there's $100.
How old is he?
Yeah, how old is he?
He's 13.
Okay, so that's you'd have like $100 coming back from New York State for that.
Okay.
And then
Does he own property? Because I'm
and
thinking
that's
of
I was just going to say 229. Do you own real estate?
I own my house.
Okay, there's a possibility that you'd get a refund from for the last 3 years.
Okay.
22,
Why
21, and 20.
Let's
from New York
let's
State.
put Harry on hold. We got to break for the
Yeah, we have
news.
to break for the
Harry,
news.
so hold
we'll
on.
be back on the other side. I'm Esther Golias, the tax lady. Hey, to us, you are family. And I'm Esther Golias, the tax lady from EG Tax. All of our branch offices will be open mid-January. The IRS is open the end of January. We'll get all those tax returns ready to go. So if you're somebody that is interested in having us help you, and we think we do a good job, give us a call to make your appointment as soon as possible, because don't wait for the stuff to come in. Make your appointment, and believe me, if you have a piece of information that hasn't come in, at least we have 90% of it done, and then when it comes in, we can finalize it. So, and again, if you have any loose ends out there, liabilities, you've gotten letters from the federal or state, now is the time to fix it. You don't want to wait till the IRS is open for business and then they don't send you your money because you didn't deal with it. Then you got a double whammy, 2 years of returns, right? Anyway, I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. We have another caller, right?
We're going to go back to Harry.
Okay. Oh, yeah, Harry.
Harry,
Okay.
Yeah, so they were saying if you owned your house, so with your property taxes, there's some more money.
Right. So there was a law for New York State, which is not in this year, but was in the previous 3 years, where you could get a refund up to $250 to $350 if your property taxes were substantial enough. So why don't you give us a call, because you may be looking at thousands of dollars in refunds. The $1,400, possibly $350 for 3 years, and $100 for your son if he hasn't been claimed as a dependent. So that's a lot of money.
Okay. Do you recommend I come in and to your office, or just try?
Yeah,
to do
I
it
mean,
online
you can
myself?
call us first, and this way, because I know that you're not feeling well, we'll ask you some very pointed questions. We don't want to do it on the radio. Everybody's listening. And we'll let you know if you're going to save money. But it sounds very good, like you will.
Okay. Thank you very much, and I'll
You're
be giving you a
welcome.
call.
thanks,
All right.
Harry.
Happy New Year. All right, I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Text us back at 716-8030930. Okay, let's see, what else? No, do we have any
Yep,
other
Yeah,
we
there's
got
three.
Mike. Hey, Mike, how can we help you?
Hi, how are you? I had a pension and some interest this year. I'm wondering about doing a Roth conversion up to the maximum 12%. Do I understand correctly that I would, to get that maximum number, I'd add the pension and interest, which is about $25,000, and then for married filing jointly, the deduction. So then, could I?
Okay, so let's go this step by step. How much is your pension that you get annually?
$17,352.
How much?
$17,352.
All right, so we got $17,352 and a $25,000 interest income, right?
No, 8.
Oh, I thought you said 25. Okay, so
Well, I
8,000 in
added the
interest.
two together.
Oh, you did the math for me. Okay, and how much is your Social Security?
18,560, but that's not taxable, right?
Well, not necessarily. Are you a single gentleman or married?
No, married.
Okay, is that 18,560 for both of you or one?
That's mine. She doesn't collect it yet. She's too young.
Does she have any income?
How old is she?
Say it again, please. There
How
was two
how
voices.
old is your wife?
64.
She's not too young to collect.
Well, yeah, but she's not going to. We're going to wait a few years.
Okay, you realize that she won't break out even so she gets to be 82.
Right.
Okay, all right.
And does she
So-
have any income?
No. Well, I mean, ours is together. We put everything together.
Right. Okay, so we got
43,900.
I'm doing the math here. 32,300. Okay, divided by 2. Okay, so we 1155, and we got 2,538. All right, so that's 26,505 taxable income minus your 32. So all right, so you still don't have. You won't have any tax liability, and so that would mean that you could take out about $3,000 to do the conversion and have it still not cost you anything.
Right. And then I could do another 94,300, correct?
94,300 for what?
More of to do a conversion.
Right. to
Okay,
do
you
conversion.
can do any amount you want on a conversion, but you're going to pay taxes on it, and it's going to make your
But
Social
to stay
Security more
within the
taxable.
12% tax bracket with what I was paying.
Okay, you're talking about taking another 90,000 out, right?
Yeah, 94,300.
Okay, well, you won't be in the 10% tax bracket anymore.
No,
It's going to
12.
make your Social Security 85% taxable.
And then you don't want to hit
and
Irma.
you're going to also go into
Yeah, 130.
potentially Irma.
200
200,000.
for a married.
Well,
No,
I guess not.
Yeah,
Right.
130 for a single.
But you will pay 85% on your Social Security as well. So you won't be in the 10% tax bracket anymore.
12.
And here, right, he'll probably be 12%, right? But the thing is, on your 90,000, you're going to end up paying about 20,000. Well, about 15,000. No, state of New York too, about 20,000 in taxes.
Right, I understand that.
You want to do that?
Over the next 30 years, I'll gain that and then some. I think I'll gain that 3 times over according to my math.
Okay, well, that's what it's going to cost you. So make sure you withhold the taxes when they're doing the Roth conversion, so or do estimates so that you have the money in there.
Okay. Yeah, I want to do it for this year. I was told that I can still do it this
You
year.
can do whatever you want this year. You got three more days.
Thank you, Ed. You're funny. Thank you.
All right, you're welcome. I'm Esther Gillius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. Okay, so
We got Tom from Cheektowaga.
Brian
Hey, Tom.
and Doris.
Hey,
Hi,
Tom.
everyone. Thanks for taking my call.
Yes.
I had a quick question. My parents have some money in a safe deposit box and wanted to give some of that to me, and I just wanted to understand the tax implications for it
Okay.
and how I would file that on my taxes if I need
Okay.
to.
Anyone that gives you a gift anyone, mom, dad, aunt, uncle, person on the street, anybody that gives you a gift. You as the beneficiary, the recipient of the gift, it's tax-free to you,
Okay.
Nothing you have to do.
provided it's just plain old cash. Okay? Now, it gets more complicated if the gift they give you is out of a pension, for instance. Then it's going to cost them money to give you the gift because it's going to be taxable to them if they take the money out.
But it sounds like
Okay.
it's just sitting in a safe deposit.
Right,
so
but if
that's
it's
good
just
news.
cash sitting in the safe deposit box,
Yes.
you're good to go. Now, if they give you more than $18,000 in 2024 in the next 3 days, then they have to do a gift tax return. Next year, 2025, it moves to $19,000 before they'd have to do a gift tax return because they have to let the federal government know that they're gifting away money because the federal government is worried that they would be not paying all of their estate taxes if they gave more than that, the $18,000, and so they would have to potentially file a return. But if their estate is under 14 million, they're in good shape.
It is, and so I don't need to claim that on my taxes
Nope.
then as income, correct?
Nope.
Okay. I appreciate it. Thank you very
You're
much. Have a
welcome.
great holiday.
You too.
Merry Christmas.
Okay. All right. What do we got?
Brian.
Hello. How can we help you?
Hi, I had a follow-up to the guy who owned two houses.
Yeah.
Me and my wife were married. We do have two houses that are next door to each other. She lives in one as her primary residence. I live in mine. The other one is my primary residence. If we were to sell both of the houses, would we have to choose one to be exempt? Or because we each live in one of them as our primary residence, would we be able to?
Okay. So
not pay
the burden
taxes
of proof is on you guys to prove that you are married, but you really live in two separate houses. Okay, that's number one. Number two, if you file married filing separate, then the first
We file
250.
jointly.
No, not if you're going to get. Not if you're married separate, you both would get the 250
Exclusion.
exclusion. If you file jointly, it'd be 500 on one of the houses. Otherwise, it'd be 250 if you're filing separate.
Okay, so I wasn't planning on selling, but I heard you talking to the other guy. I
Yeah,
was just curious.
right.
But
So,
if we
so
did
that's
sell
the
them both-
situation. In order for you to take the exclusion of $250,000, it's 500 joint if you have one personal residence. If you have two personal residences, then it would be married separate. And in the event of an audit, you'd have to prove that it really was that way.
So if I've been filing jointly on the year we sell the house, could we switch to file separately for that year, or would that
Yes.
be like a
Yes.
red flag?
You can always file separately.
Okay. All right. Thank you very much.
It might
very
it
welcome.
might cost you more in taxes, so you might want to run the numbers and
Right.
make
Absolutely.
Yeah.
sure.
Yeah.
You know, because the thing is, it's the gain. So maybe house A, the gain is very little, but house B, it's big, and so it'd be more to your advantage to just take the 500,000 on the more expensive, on the bigger gain. So you got to really run the numbers, and that's where you want
we've owned
to
them
deal
for
with
quite a
somebody
while,
that
so
knows
the
what they're
gain's
talking about.
probably gonna be
Pardon?
big.
All right, thank you.
All right. Thank you.
Merry
All right, you're
Christmas.
welcome.
So we've got Doris next. I don't know
Hey,
if you want
Doris,
to do a
how
break
can we help
first.
you?
Hi, thank you. I have a quick question on the RMD. If I sent had them send 2,000 to my church, and I'm able to itemize, can I still itemize and take that the 2,000 or whatever I have sent?
All right, so here's the thing, Doris. Let's say your RMD is 2,000, and they send it to the church.
Right.
Then it doesn't go on your tax return at all.
Right.
Hallelujah.
So,
Okay, so
so
guys,
you don't
can I-
get to use it as
Right?
a,
You don't use it as a deduction because it's not
Okay.
taxable.
All right. Okay. Thank you
All
very
right.
much.
good
Welcome.
question.
All right, I'm Esther Galisa, tax lady, 8030930, 8030930, star 930 on a cell phone. We're going to take a short break, and we'll be back with your calls on the other side. Oh, I know.
Time to hide in the closet for
Tomorrow's
you.
Sunday again. It comes around every week. How is he doing? How is our
Josh.
the hero guy doing, Alan?
I guess good. Haven't heard anything all
He hasn't
week,
called
so-
you?
Nope, nope.
He hasn't called me.
Like
Maybe
Don-
he called Donald.
Donald.
Maybe he called Don. Yeah, Donald Trump. Anyway, I'll be in my closet and praying. So that's the way it goes for me. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone, 716-8030930 is our text line. I wanted, Tiffany, on the commercial, talked about harvesting losses. You got 3 days. If you have losers in your portfolio and you have big gainers, big interest and dividends and sales, you can offset that with harvesting your tax losses. So you want to make sure that you do that in the next 3 days if you want to save money. If you would prefer to pay taxes, oh well, don't listen to us. But I'm just giving you a suggestion, right? Because that could really help at tax time. All right, and we have John that's been waiting.
Yes.
Hey, John, how can we help you, sir?
I want to clarify something you mentioned earlier about gifting gifts to somebody.
Yeah.
If my mother-in-law gifted my wife a lot of U.S. savings bonds, $25, $50, $100 bonds over the course of 20 years, and we kept them in a safe deposit box, and then all of a sudden cashed them out after they reached their value, do we have to pay tax on that?
Yes, you do. Because the gift itself is not taxable, all right? But the appreciation on the money, the asset, is taxable if you never paid taxes on it before. And so, I mean, there's some fine tuning here. If it had been theirs and they passed away, there you could make an election to have it go on their return. But if this is something that they had done over a number of years, that gift at the time it was given is not taxable to you. However, the appreciation that nobody paid taxes on is taxable.
Okay, thank you.
Only on the federal, not on the state.
Right. Okay, thank you.
A really downer, isn't it? Okay. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on the cell phone. What else we got here?
Sure. So the first text is, I was told by a former accountant, now I'm with you, that my deceased mother's income tax didn't have to be filed. I forced her to file one anyways. Better to be safe than sorry.
I paid and didn't care.
What does that mean?
So
I paid and
she
didn't
might
pay?
have owed money. So
oh,
she.
well, okay, because really, but then again, if he's the heir, he says that he's going to pay all of her bills anyway. So, yeah, he did the right thing.
Right, because if he didn't file,
Wouldn't have got the stimulus.
they
Right.
would be sending a bill out later, and then,
Right.
yeah.
Okay, the other thing
maybe
is,
he meant
if
he
you're
paid
an
to file.
itemizer, you got 3 days to give to charity.
Yep.
Those last minute charitable things. Maybe you say, "Oh, I'm a tither and I'm only at 8%. I got an extra 2%." Make sure you do it within the next 3 days because they have to be postmarked by the 31st. And again, we talked about the 529. If you want to give money to a 529 plan for New York State, you got 3 days to do that. So. Okay, and we have what other text we got?
Could you explain the rule if you filed in 21 to be eligible for the 1400, or is this something that a rebate, or what exactly is it? Thank you.
Chris, you want to explain
Sure.
that?
So the $1,400 that's in the news right now is the stimulus money, the third stimulus check. They're just reminding people saying, hey, if you didn't file, you still have $1,400 coming to you. So get your return in for 2021 so we can get you your money.
Yeah, because the
But if
statute
you
of
filed
limitations is about to lapse. 2021 is about to
Right.
go into the sunset, and you won't be able to do it after this filing period.
But if you did get the money, you're not going to get it again. It's for those people that didn't know, probably do-it-yourselfers that didn't know. And so if you filed a return, they're going to automatically send you the money they said before the end of January. But if you didn't file, like that gentleman that called, I think he had the lung cancer. He was fighting lung cancer, and he hadn't filed for 8 years. That guy ought to file because he has $1,400 coming back.
Right.
And it's going to be probably seniors or people that are on Social Security that they don't have to file. But during that whole stimulus thing, they were just sending out money like to beat the band. And this is one of those beat the band things, $1,400. So you want to make sure you get that return in.
Correct.
Right? Okay, what else we got?
Happy New Year to all the EG Tax family. What is the Charitable Remainder Trust? Is how they worded it.
Okay, so a charitable remainder trust is when you give money to charity and basically you get the income from the charity, but the corpus, the body of the contribution goes to the charity and you get the tax deduction now. I mean, it's a lot more complicated than that, but that's close.
Right. It's very, very confusing.
In other words, let's say you got $1 million and you want the deduction now, and you give it to charity. You can get the income from that $1 million while you're still living, but you get the deduction now of the charitable contribution that you did.
Right.
Yep.
Okay. All right. What else we got?
That sums that up. Which
okay.
was
All right. So here's
flurry.
some of the things, and I especially want to. I'm thinking about the guy with the $92,000 he wants to roll over from the traditional to a Roth. One of the proposals that Trump is coming up with is that Social Security shouldn't be taxable. Well, if you do that $92,000 rollover this year in 2024. You're going to pay taxes on your Social Security at 85%. If you wait till next year, nobody's going to make you, you don't have to do the conversion right now. If you wait till next year and just see what Congress is doing, they may make Social Security tax-free, which would save you a lot of money. So that's one of the things while you're rushing to do some of the things that are under old tax law, you may be just shooting yourself in the foot because under the new things that are coming, it may not be taxable at all. So if you can be patient, it may save you thousands of dollars in taxes.
Yeah, there's a text that just came in. It says, I filed via Chris and received the $1,400 on Tuesday. Is this kosher? I think they mean, is it okay, right?
Yeah, it's wonderful. Go have fun.
Yeah.
The New Year's Eve is coming.
So it's very
Don't
apropos.
go to the casinos, especially if you're a senior right now. Okay, so here's some of the things that Trump is proposing.
And there's a caller that just came in, too.
Okay, we'll keep you abreast of everything. Increased standard deductions, personal exemptions, again, under the TCJA, Tax Cuts and Jobs Act, that was eliminated. The child tax credit was $2,000. They're keeping that in place. We believe this is up to Congress. There were limits on itemized deductions and the $10,000 maximum sales state and local income tax. That looks like that's going to be repealed, and so good news for New Yorkers. The 199A pass-through deduction, if you have a business or rental property that's acting as a business, 20% of that is a deduction even if you don't itemize. And bonus depreciation of 100%, that's going to be re-upped as well. So these are just some of the tip of the iceberg. And no tax on Social Security, no tax on overtime pay. Wants to eliminate a lot of deductions for energy subsidies, which I was saying you got to make sure that you got 3 days to put new doors and windows in.
Insulation. You want to do John before the
Okay, we'll
show?
call John. Hey, John. John?
Oh, hello?
Hi, can we talk to you quickly?
Oh, yeah, hi. It's actually Josh. Hey, a long-time listener, great show, guys. I live downstate New York now. Lived in Buffalo for 25 years, but have a real quick question on the tax stimulus check. So my partner filed his taxes and received the checks, not direct deposit, but the physical checks, and never cashed them. So they're still dated at this point. So how would we go about getting those replaced?
All right, so he's going to have to contact the IRS, and they're going to ask you to submit those stale checks again to have them reissued, and that takes quite a while, doesn't it, guys?
Yeah.
Oh, sorry. I'm sorry. I would say he should call us because he's not going to get through to the IRS, and we'll do a conference call. What
He's
were you
got
going
to
to say?
do a Form 3911, a lost check.
And they're going to make sure that they get that they're going to make you send that check back. So make sure you take a copy of it so you have proof.
Okay.
But call us. We're very happy to help you.
Yeah, we'll do. I'm going to use you guys this year for my taxes.
All right. Well, Happy New Year to you.
We'll take good care
Thank
of
you
you.
guys.
Yep.
Yeah,
All right.
give us a call at 716-632-7886, and we'd be delighted to help.
And by the way, we have a brand new website that should be launched when, Chris?
I love computers. Hopefully within a couple weeks. Right now it's locked. They can't transfer it over to somebody, but we're going to get that new
But
site
our
up
old
as soon.
website
Our
is-
old
Our
website
website's still up,
works.
but we have a
We
brand
gotta
new,
update it.
brand
Yep.
new spanking, cute, fancy, easy to use website, and we really would like it to be used. But somebody that was holding our website for 30 years ago won't let go of it. You think that it's easy? It's not easy anywhere. Electronics, hello.
Yeah.
Right?
Yeah.
All right, but everybody, I hope you have a wonderful new year. I will tell you, one of the things that I want people to understand is looking at the new regime, whether you like it or not, whether you were a Trump supporter or not, I really do think that he's going to, as much as he can, reduce taxes. So you want to be careful about having you pay taxes in 2024 if you can wait till 2025, because if there's a tax cut and the income is in the next year, you save money. Just like this guy with the $92,000, So it's a lot like playing bumper pool. You just got to know all the angles and use them to your best advantage. The thing with tax law, it's like you don't want to cheat, but you want to take advantage of every deduction out there, and EG Tax will help you. Right?
Exactly.
All right.
Yes.
Well, everybody, God bless the Bills. I hope Josh Allen's hand holds out. I would love to see us beat the Jets again. So until next week, I'm Esther Galias, the tax lady from EG Tax with Tiffany Fabian, Christopher Fabian. Happy New Year. Thank you for listening. God bless you guys.
The previous program was paid for by EG Tax.